Welcome, everybody. We'll get started here in just a couple minutes. We just want to make sure everybody gets signed on. Welcome, everybody joining us. We'll get started here in just a couple of minutes. Just want to make sure that everybody gets signed in. We'll maybe give it just another minute. Welcome, everybody. Well, I think because we have so much to cover, we better go ahead and get started. So again, welcome everybody. Good evening. Thanks for joining us. We had just a great response for this, so that's exciting. I'm Brooke Lovelace. I'm the Executive Director of the Iowa Developmental Disabilities Council. The DD Council is excited and proud to be a partner with the State Treasurer to promote the IAble accounts and provide education as to how they work. The IAble accounts are a great way for people with disabilities to obtain and maintain independence, and our DD Council is really all about helping people do that. If you are familiar with the DD Council, we will have our website and contact information will be given at the end of our time together today. But we really wanted to spend the majority of our time then obviously talking about the IAble accounts so people have the information they need for those. Just some housekeeping things before we get started. There is closed captioning, and there's a button on the bottom. It may be running for everybody right now, but if not, you can click on that button on the bottom. We have two interpreters here with us today, Sally and Karen, and they should hopefully be pinned for you to see. Everyone will be on mute during the webinar, but there will be time to answer some questions at the end of the presentation. Please feel free to enter your questions anytime during the presentation, and you can do that by using the chat tab on the bottom of the screen. We do have Alicia here that will try and answer some of those questions as we go. We may not be able to get to all your questions today, but we will get back to you with any questions that were unanswered. I think we want to go ahead and start with a poll question. Just to see how familiar everybody is with the IAble accounts. And there it is. Oh, I love it when technology works. So if you could go ahead and just take a minute to answer the poll question, we'll give it a minute. And we will share these results here later on as we get going with our presentation.
All right, we had our first glitch. I can't play the video.
Oh no.
I don't know, it shut down. Apologies. I'm going to try to pull it back up real quick.
Okay. Hi. We'll give it just a sec. While you do that, I'll introduce you. I'm going to turn it over here to Karen Austin, who's the Chief of Staff of the Treasury for the State of Office. We'll just let her get some technical stuff together so you can see a message from the State Treasurer of Iowa, Smith.
Are you seeing my screen right now?
We are.
Okay, great. All right. So this is a video. The State Treasurer was not able to join us today in person, unfortunately, but he did want to send a message. The sound on the video might be a little bit low, so if you have the opportunity to turn your volume up for this, that would be great, and then we'll get started right after that.
Hi, I'm Robbie Smith, Iowa State Treasurer and Administrator of the IAble program. I want to thank you all for being here today, and I want to thank the Iowa DD Council for the work that they do. The goal of this webinar is to spread the word about IAble. And please share this webinar with anybody that might be able to benefit. Enjoy. Thank you.
All right. Well, I just want to reiterate what Treasurer Smith said. We are really happy to have a lot of people on this call today. We're excited to share this information with everybody. And my name is Karen Austin, as Brooke said. I am a Deputy Treasurer in the State Treasurer's Office. I had the opportunity to work with the team that launched this program in 2017 here in Iowa. Alicia Callanan is also on the call. She's or on the webinar. She's going to help me with questions at the end. We're going to kind of tag team those as we go. But wanted to just give you an idea of our agenda for today. What we want to do is just kind of introduce folks. So we know there might be some folks on this call that have experience with ABLE and others that don't. So we're going to introduce you to ABLE and talk a little bit about the timeline and an overview, but then talk about IAble, which is Iowa's ABLE program. And of course, we did leave time for questions at the end. So we're really looking forward to answering your specific questions. So ABLE stands for Achieving a Better Life Experience. There was a federal bill that was passed in 2014. It was the Federal ABLE Act that really showed the importance that the federal government felt it was to give an opportunity for people with disabilities to have the opportunity to save. In 2015, so immediately following that, Iowa was one of the first states to pass a bill to enact IAble. That bill was passed unanimously. Treasurer Smith was actually in the Senate at the time and voted for it. It passed unanimously and was signed into law with no problems because everybody knew the importance of this program. It took us a little while to get the program launched. We worked as part of a National ABLE Alliance. We worked with other states to create a program where we could all share resources. So we launched in 2017. It took the federal government a few years to get their final regulations. They published those in 2020, immediately following the federal regulations being published. Iowa jumped back in and made sure through House File 835 that they were able to implement those issues that were in that federal regulations to make this program even easier for people to use. So we have really been working over the course of the last few years to try to make this program easier for people to use. And then in 2022, so November of last year, the final regulations were implemented and the ABLE Age Adjustment Act was passed. I'm going to tell you why we're so excited about the ABLE Age Adjustment in a little bit. So the foundation and success of IAble, we really didn't know what to expect when we launched this program. We're really excited that we have over 2,000 accounts today. The average account size is almost $9,000 and our total assets are 18 million. But one of the things we're really looking forward to today is to get more people to know about IAble and find that it really is a tool that they can have in their toolbox and really grow these numbers. So I'm going to tell you a little bit about Iowa's ABLE program. So we'll start with what is IAble. It is a program that allows eligible individuals, and we'll talk here in a little bit about who is an eligible individual, but allows eligible individuals with disabilities and their support systems to save for qualified disability-related expenses, at the same time earn tax breaks similar to what College Savings Iowa, the 529, one of the things that was really important both at the federal and the state level is to treat savings for disability-related expenses very similar to how we treat savings for college. But the most important piece that we really believe and we want to make sure people know and understand is that it also protects the eligibility for assistance programs. And the two largest of those assistance programs are Social Security and Medicaid. So let's take a minute to talk about who is eligible. 3 criteria have to be met to have an IAble account. First, the disability has to have begun prior to the age of 26. So today, if an individual's disability was present before they turned 26, then they would be eligible to open up an account at any age. So let me give an example of somebody who's 40 years old today. If their disability was present before they turned 26, they would still be eligible even though they're over the age of 26 today. In terms of the disability must be a long-term disability, and it must cause marked and severe limitations. So it has to be a significant disability. In addition to those two things, you have to meet one of the following three criteria there under number 3. So the individual is eligible for SSI or SSDI due to their disability. The individual's condition is listed on the Social Security Administration's compassionate allowance list, or the individual has a disability that's been diagnosed by a physician. Now they would need a copy of that diagnosis for their records, but we certainly wouldn't want that. I'm going to pause right now and I'm going to share the results before I continue of the original poll that we took, the first poll that we took. So just looking at what people, how familiar people are with accounts, it looks like we have a really good mix. We have a few people that may be experts at this, but then we have a really good mix. I think that's going to be exciting as we kind of go through this, and hopefully by the end of this, you guys will all be able to move up in your how much you know about an IAble account. All right, let me go to the next slide here. All right, so I want to talk about the ABLE Age Adjustment Act because we were really excited when this law was changed. The state of Iowa, along with every other ABLE program in the country, had really advocated hard to get that. I talked about the age of 26. We worked really hard to get that age moved up to 46. So who this impacts is, again, individuals with disabilities and their support systems. What is changing is that eligibility age is going to change from 26 to 46. Just as a reminder, that's when the disability becomes present, not the age at which you're opening an account. Unfortunately, and there was some disappointment across the country when the effective date was set for January of 2026. So we're really excited about this, but it's not going to be, you're not going to be eligible if your disability was present between 26 and 46 until January of 2026. But the great thing about this is that is going to enable an estimated 6 million more Americans, including 1 million veterans, to be eligible for IAble accounts. So again, we're gonna make sure that we're letting everybody know that's the case as we move forward. Let's talk a little bit about maintaining benefits. I think for some of us, this is maybe the one area that we get a little bit of pushback from people that don't necessarily believe, you mean I can really have more than $2,000 and still get my SSI benefits? And I'm here today to tell you, yes, that is true. The first $100,000 that's saved in an IAble account is disregarded from SSI eligibility. So that first 100,000 is not considered. So you can have 102,000 essentially, because it's not considered in that calculation. Now, funds over 100,000 are treated as a resource. So, always giving caution to make sure if the market is doing well and you have it invested, to keep an eye on that. You wouldn't want the funds to go over 100,000. Housing expenses are treated a little uniquely within ABLE plans. So they're not treated as a resource if they are withdrawn in the month they are used. So if you think about, you've got an April rent payment that is due, you're not going to want to take that money out of your IAble account in March to prepare yourself to pay that April. You're going to want to take that out in April so you can make that April payment. IAble does we are required to report account balances monthly to the Social Security Administration. So we do that. And then one of the exciting early on changes, but it is something not everybody knows about, is you can have your Social Security and SSI monthly benefit payments directly deposited into your ABLE account. So that's pretty exciting from our perspective. We're going to take a pause here and do another poll. Not sure if I did that last one. There we go. Where we're going to ask just a true or false question. An individual must be under the age of 26 to be eligible for an ABLE account. We're just going to give that just a minute. I'm going to move to my next screen, but then I'll put the results up here in just a minute. This is great. We're getting a lot of people answering. All right, I'm going to go ahead and end the poll. I realize I didn't hit share results the last time, so my apologies that I didn't share. I'm going to share the results this time so everybody here can see. It looks like the majority of folks got that correct. So the kicker here is an individual must be under the age of 26 to be eligible. They don't have to be. It's just that that disability had to have been present before they turned 26. So again, that's just one of those things we will reiterate multiple times in this program, just so that everybody's on the same page. Some of the other benefits that disregard the ABLE assets, it's not just the SSI, the Social Security, it's also HUD, FAFSA, SNAP, but most importantly, I think what we hear from a lot of people is really that Medicaid. So all four of those programs also disregard the ABLE assets. And I will say that, while the ABLE Act was passed in 2014 and the first plans launched in 2016, we launched in 2017. Even though we've got several years under our belt, we partner with a lot of these federal organizations, but just know that if you run across somebody who says, nope, that is that is part of the calculation, feel free to reach out to us or ask them to double check that within their organization, because, again, as we partner with them, more and more people are learning within those organizations that these are disregarded. So Medicaid recapture, there's been a change in the state of Iowa in recent years that changes the ability to recapture the funds. So under Iowa law, Medicaid cannot recapture the money in an account, in an ABLE account following the death of the account owner, unless required by federal law. And I'm not going to go into that in depth right now, but there are certain circumstances in which the federal government requires Medicaid to recapture. Those are generally, and again, I'm not going to give this, don't bank on this, but those are generally in cases where the individual is over the age of 55 or there's been an institution involved in their care. So again, we have more information in our plan disclosure booklet. In addition, we really encourage you to contact your Medicaid income maintenance worker if you have questions regarding your specific case. It gets really difficult for us to answer specific questions. All right, let's talk about opening accounts. This is the part that really excites me. I'm hoping that a large group of you are going to open accounts after today's webinar. So let's first talk about the situation in which the eligible individual is under the age of 18. And one thing that I want to just mention is, we talked about eligibility earlier. We do have an eligibility quiz on our website and would just encourage you, we had that great slide. This webinar will be available for viewing afterwards, but we do have a spot on our website, which is IAble.gov, where you can take an eligibility quiz and it will let you know, what criteria you have to meet. But let's imagine that you have an eligible individual who is under the age of 18. So you're a parent, you have a child under the age of 18 that has a disability. The parent or individual with financial authority may open the account on behalf of the eligible individual. And in that case, no documentation is required. Now, if you have an eligible individual who is over the age of 18, there's kind of two scenarios we can break that into. In one case, they have legal capacity. In the other case, they lack legal capacity. So let's talk about if they do have legal capacity. If they're able to make their own legal decisions, then they can open their own ABLE account. I mean, that's one of the great things about achieving a better life experience is giving people the opportunity to open this financial account on their own. In some cases, they may decide, you know what, I'm going to let somebody else have that authority to act on the account, or I'm just going to ask somebody else to open the account on their behalf. So they have that option. to do that, but they do have that legal capacity. They have to exercise that option to allow somebody to do that. Now, in the case where they lack legal capacity, in that case, an authorized individual may open and manage the account on behalf of the individual with a disability, according to the hierarchy that was established under the federal regulations. And I'll tell you, I'm going to talk about that hierarchy, and we really see this as a great, I'm going to say, win in the industry, because this opened the door to really set down who can open these accounts and hopefully open that door for more accounts to get opened. So an authorized individual, just so you know, does have to certify under the penalty of perjury that there is no other person with a higher priority who is willing or able to act as the authorized individual. And then they have to agree that they're going to notify us if that would happen to change. So when we look at this hierarchy, that tells us that if you have power of attorney, you're first in line. But then a conservator, a spouse, a parent, a sibling, a grandparent, or a rep payee that's appointed by the Social Security Administration. And that can be a person or an entity. So just remember that phrase, is willing or able to act as an authorized individual. So let's say that you're a grandparent and you really want to open this account. You just have to make sure that there's not a sibling, a parent, a spouse, a conservator, or a power of attorney above you in that hierarchy who is willing or able. And again, for rep payees, that's probably, one of the things that's going to open the door for entities to be able to, and we'll talk about that in a little bit. Actually, we're going to talk about it on the next slide. No documentation. The way that Iowa has set this up is we wanted to reduce the documentation as much as we could. So no documentation is generally required, but we do always reserve the right, if there is confusion or disagreement, or we just need to verify something, that we can ask for information as we go along. All right, so one of the other great things that happened in November of last year was we now have the ability for disability entities to serve as authorized individuals. This is a great opportunity for the growth of our IAble plans. This unfortunately is currently only offered through paper enrollment, but managing the account becomes much easier. So we just ask that those entities plan, organize, and then stay informed. So when you're planning on the account, identify the agency representatives who will be responsible for opening and managing the IAble accounts, and then just ensure there will be a single continuously monitored organizational email that can be used for the account. And always stay tuned as we're making changes to the program. All right, I'm going to spend a little bit of time talking about investments. This money, this is an investment account or a checking account. We'll talk a little bit about that, but this is your money or the money that belongs to the individual you're helping save. So what we wanted to do was make it easy to get in the door. So you can open an account with as little as $25. There's 6 investment options. They are professionally managed investment options. They range from aggressive to conservative, and we have some information on our website that can help guide you on whether you're an aggressive or conservative investor when you really think about how much can you handle the market moving. But the greatest thing is we also have an FDIC insured checking account option through Fifth Third Bank. So we don't have a local bank that's able to do this. This bank provides this service to all ABLE plans in our alliance, but it does include a debit card. And we have found that to be something that people really like to have the option of. You can choose a single option or a blend up to 7. So if you want to have a checking account, so you have access to the money a little quicker, yet you have, think of it as like having a savings account. You can also have one of those investment options in the background as well. We always want to be upfront about any fees that are charged. So there are some fees associated with this. We have already been able to reduce the fees several times since we launched the program, and we will always work towards, as we grow the program, reducing fees every time we can. There's a quarterly fee. It's an account maintenance fee. It's billed quarterly. It's $14.50, but it's discounted if you get e-delivery. So it's discounted to $8.25. Also, there's asset-based fees that comes with investing, those investment accounts. They range from 30 to 33 basis points. For the checking option, there is an additional fee, but that is waived. So there's a $2 fee that is waived if you have an average daily balance over $250 or you enroll in electronic statement delivery. So there's two different places. If you have the checking and a investment account, you do have to sign up for e-delivery in two different places, but in both cases, they're going to really help reduce the fees overall. All right, let's talk about the fun stuff like contributions, qualified expenses, and more. So contribution sources, how do you get money into these accounts? Well, the great news is it can come from a lot of different sources. The account owner can put money in. You can roll money over from a 529 plan, and we're going to talk a little bit more about that in a little bit. And then family and friends can also contribute money. I'm going to go back a slide. Okay. Did I skip a poll question? I think I might have skipped a poll question. Maybe it's coming up. So let's talk about contribution amounts. You can put in up to $17,000 is the federal contribution limit. That includes those rollovers from the 529 plan. Again, you can create an account with as little as $25. You're going to hear that more than once during this webinar. And then balances cannot exceed $100,000. We talked about that a little bit ago if you want to maintain your SSI resource limit. You can have more than $100,000 as long as you aren't concerned about your SSI resource limit. A great thing that happened recently was the Able to Work Act allowed you to increase that $17,000 if the account owner has earned income. So the account owner, if they are working, they can have at least $13,590 is the maximum amount. So they can either add in the amount of their gross wages or that limit. And that limit is adjusted occasionally by the federal government, and we keep that updated on our website. I'm going to ask Emily to go ahead and launch the next poll at this point. I might be early, and I apologize if I am. True or false? Only the account owner's contributions count towards the federal annual contribution limit. We'll just pause here for a moment. And as you're completing that poll, I will tell you that this next section is the one that we get the most questions about. So as we're looking at the results of that poll here in a minute, I'm just going to caveat the section on qualified disability expenses with the standard disclaimer that the Treasurer's Office cannot provide tax or legal advice related to qualified disability expenses. All right, I'm going to go ahead and end that poll. And I'm going to say this is a great class because you are definitely paying attention. That is false. All contributions to the account do count towards the contribution limit. All right, so let's talk about how we can spend this, the qualified disability expenses. What qualifies? The interesting thing about when this bill was passed in Congress, so at the national level, and then the state of Iowa followed suit on that, is the idea is to allow you to use the money on anything that will maintain or improve the health, independence, or quality of life of the person with the disability. That's pretty broad. It was intended to be broad. The idea is there is no way to make a list of everything that is going to help maintain or improve the health, independence, or quality of life. Therefore, that's a little bit on the account owner to make sure that they meet that threshold, but it can be used for things like housing and rent, assistive technology, basic living expenses, transportation. You can see the list here. The idea is, anything that's going to improve that health, independence, or quality of life. That's really what it can be used for, which is pretty exciting from our end. We do have a spreadsheet available on our website that helps you kind of track those expenses, because you are going to want to keep track of how it met that qualification in the event that you're ever questioned on that down the road. All right, so we're going to talk a little bit about tax benefits. There are both federal and, for Iowa taxpayers, state tax benefits. So on the federal side, the savings grow federally tax deferred. That means that you're not going to pay any taxes on the money as the program grows. Qualified withdrawals are federally tax exempt. So at the time you take that money out of the account, as long as it was used for one of those qualified disability expenses, there's not going to be any taxes to pay at the federal level. And then we talked about it a little bit ago, but you can roll over assets from a 529 plan without penalty. That's a really exciting thing for those families that maybe you started saving in a college savings plan, in a 529 plan, when your child was 5, and then they became eligible for an IAble plan. You can move that money. Just remember that $17,000 limit does apply. For Iowa taxpayers, the state legislature wanted to make sure that they gave the same benefits for saving for disability related expenses that they had for college savings expenses. So those savings grow state tax deferred. All withdrawals are state tax exempt. So you're not paying state taxes on the growth of those funds. But the state sweetened the pot, just like they did in the 529 arena, with a state tax deduction for any Iowa taxpayer that's contributing to an IAble account. This is a little bit different than a 529, because I'll go through it in the next slide. Anybody can make that deduction. For this year, it's $3,785. We have a great graphic that our wonderful staff put together that really helps explain how that $17,000 can be maximized with different people contributing. So if the account owner is contributing, let's just say the account owner put in $3,000, they can deduct $3,000 from their taxes when they file their taxes. They've got a good friend that gave them $1,500 directly into their IAble account. That friend can take a tax deduction. That friend's just going to want to keep track of that, so they can show that, the IRS that they made, or I'm sorry, the state of Iowa, that they made that contribution in the event that they're audited. Grandma says, I'm going to give you $3,500. She can deduct that $3,500. Now, mom contributed $9,000. But in this case, mom's only going to be able to take that deduction of $3,785 because that's the top amount that she can take, but she can contribute more than that. Any individual on here can put more than that in. That's just the max that you can deduct. So all of that added together is the $17,000. And remember, if the account owner is working due to able to work, they can put more money into the account. All right, so I'm going to go through real quick on our plan highlights. What we want to make sure you took away from this is you can save above the income limits for SSI and Medicaid. No documentation is required to open an account. You can open an account with as little as $25. I know you've heard me say that multiple times. You might hear it again. You can involve your family and friends in your savings goals, and you can choose to invest the money using a checking account, or you can have a combination of the investments and the checking account. And remember, any Iowa taxpayer can take a state tax deduction for their contributions. All right, so how do you get started? I'm hoping that that's what all of you are wanting to know right now is how do I get this account open? The first thing you want to do is review our plan disclosure booklet. Then you're going to want to research your investment options. We have a great website, IAble.gov. One of the pages on there is dedicated to investments. You're going to need to gather your account owner's information. So name, birth date, address, the pertinent information you need for the account owner. If there's going to be an authorized individual, we're going to need similar information for them. And then go to iable.gov and click enroll, and you can get started. I just want to reiterate that we really do encourage you to look at the investment options prior to getting started. What we notice is the biggest place that people drop off in our enrollment process is they get to that investment page and like, oh, I don't really know what I want to do. So that's just a great thing to get started. If that happens to you at any point in the enrollment, you can always save your enrollment and go back to it later. So just because you don't have, all of this information at the time, you're able to get started. All right, we're going to throw up our last poll question here. Which is, we want to know, we're really interested in knowing of the topics in this webinar, which one would you like to learn more about? We are always interested. We tailor our webinars based on what you guys want to know. So this really does help us plan for our next webinar. And this is really fun. I'm watching the results. So it's really fun to be able to watch those results. We'll share them here in just a minute. And as soon as I end that poll and show those results, then we're going to open it up for questions. Brooke has been Brooke and Alicia have been looking at those chats all along. And what we'll do is Brooke will probably just pose the questions. So if you do have questions, please go ahead and put those in the chat and we'll get started answering those. I'm going to go ahead and end the poll and then share the results on that. So the great thing is it looks like there's a mix. So maybe there's not one thing that that stands out as something that we didn't really need to talk about. But thanks again for participating in the poll, and we will use those results as we move forward. At this point, Brooke, I'll let you kind of let us know what those questions are, and between Alicia and I, we'll get them answered.
Okay, great. And Alicia did a great job going through most of these and getting them answered along the way. So thank you for that, Alicia. I do have one that I'm not quite sure if it was answered about the 529 college savings funds. It was a question earlier, but what is the likelihood that the ability to transfer those funds to an IAble account for the same beneficiary exists beyond the year 2025? I don't know if there's somebody if there's a change coming with that.
Yes, that is a very well-informed participant. So the bill that the federal government passed, there is a sunset clause on that. As we were working on the ABLE ABLE Age Adjustment Act, the success in getting that through, that same group of state programs are working very hard. That is our next one of our next initiatives that we would love to remove that sunset, but that does sunset in 2025, which means, and again, remember, you have to go by those income limits. You can't move more than 17,000 plus contributions in any given year. So there is a sunset on that, and we would encourage people to contact the folks in Washington, D.C., your representatives or senators, to tell them that that's definitely something you want to see not sunset.
And one other question I'm not sure if we covered, but can a grandparent open an account for a child under the age of 18, or is it the parents only?
So I'll kind of go back to that slide, but that hierarchy that was established, I'm just going to head back to that slide because it really helps to have that up. So the hierarchy that was established, the grandparent would only be able to do that. I'm sorry, the hierarchy would not necessarily apply in that case.
Karen, I can jump in.
Okay.
I thought about this one. So the hierarchy, it would be if the grandparent had control financially of the eligible individual. So if they were the conservator or were managing the finances. So if the parent was able, then no, they would not.
Okay, and then a next question regarding legal capacity. If the account was open prior to the child being 18, what happens after that child turns 18?
Well, how it's hard for all parents. So whether you have a child with a disability or not, somehow, when they turn 18, they get set out on their own financially. So if they have capacity, then we have a process through the program that notifies the authorized individual as well as the account owner that as they're approaching age 18, that there's a decision that's going to have to be made, and ownership of the account will end up transferring, if they do have capacity, will transfer to the 18-year-old. Again, they would fall into this if they have capacity, they can choose. So if their mom was managing that account, they can elect to manage that. Alicia, is there anything else that you might want to add to that?
No, I don't think I had. I think you covered it well.
Okay.
Okay, does Iowa have a designated survivor form and process applicable to a situation where a participant dies?
I can take that one if you want, Karen.
That sounds good.
So yes, as of, as Karen previously talked about, those November, the federal regs being implemented, you can now set up a successor beneficiary, but they must be a sibling to the initial account owner and be an eligible individual. If you need to do that, you can either do it through your online account or reach out to our 800 number and we can help get you set up as well.
And I want to make sure we reiterate, Alicia said they have to be an eligible individual. So just understand that they do have to have a qualifying disability to be able to be that successor beneficiary.
Thanks.
Okay. What if you already have an account? How do you go about adding more money into your account?
Well, there's a variety of ways to do that. At IAble.gov, I'd encourage you to go, go online to your account. You can access your account, log into your account from there, but you can set up, ways to debit your checking account. At another institution, you can mail in a contribution check by mail. The information on how to send that is there. We even have a gifting platform. So for friends and family, Alicia, remind me, that is available for ABLE, correct?
Yep.
So there's a gifting platform that you can, other people who are not the account owner, they will be given a key basically that will be a link to be able to make a contribution to that person's account. So there's a variety of ways to make those contributions. Alicia, did I leave anything out?
No, I think you got them all. And I mean, you mentioned it with the gifting, but I think that is one thing, is that anyone can contribute to the account.
I think some of these we've covered. If a couple files taxes jointly, is the eligible tax deduction 2 times the $3,785?
So I will start with, we can't give tax or legal advice.
Oh, that's right.
So I'm gonna, I preface questions that ask questions similar to that. I'm gonna ask Alicia.
We lost you, Karen.
Oh, I can jump in. So as Karen said, if you didn't grab that, we cannot give tax or legal advice, but yes, it could be, I mean, it is for each person that contributes that amount. So if you're filing jointly, like if I was going to contribute to Karen's account, and let's say Brooke and I were filing jointly, Brooke could also contribute and take up to that deduction.
Then we have another one about, are you able to designate a beneficiary for an account?
Can you hear me now?
Yeah.
Okay, not sure what happened. Alicia, actually, do you want to take that one?
Yeah, so I think the beneficiary, I think we might have covered that with the successor beneficiary. So if it could be the sibling who has a qualified disability, that would be able to. And I know that I cheated and looked in the chat. So I did see that there are a lot of questions. What happens if you don't have a sibling that would qualify? So then the account would go to the estate of the account owner who passed away. And that is after, Karen mentioned this, but it is after all funeral and burial expenses can be paid out of the account as well.
Okay, another question is, what about other entity contributions such as DHS, waiver money, or grants?
Do we know if the question is asking, I mean, you can put any source of funds, the source of funds is irrelevant to the ABLE program. So is that what they're asking, is if you can make contributions from those sources?
Yeah, I'm not sure, and it might be something to do with the consumer choices option under the waiver on those budgets, but I would be thinking that that money might not be able to go into the IAble accounts, but
I think we'd have to get back on that one then.
yeah, okay.
We can't give tax or legal advice, and I would want to hesitate on giving advice there, so.
Do you guys see any downside of any to open an account?
Well, certainly I wouldn't see a downside. You know, the premise behind the ABLE accounts was to, again, help people achieve a better life experience and give them financial empowerment. So, you know, that's what these plans do. I think, you know, we were able to, a couple of years ago, one of the concerns that people were really voicing to us was, you know, the Medicaid recapture provision. We were able to work together. You know, we worked with the legislature to really, you know, mitigate that concern, because people saw that as a concern. So what we've done is tried to eliminate those concerns that we see out there. So at this point, and I think one of the things that we don't really touch on, I forgot to touch on here in this slide, is the special needs trust funds. Those funds can be transferred into the ABLE account, but in all honesty, sometimes for some people, a special needs trust has a definite advantage for them you know, for one purpose, and they complement it with an ABLE plan. So if you don't have to choose between a special needs trust and an IAble account, you can have both. So, you know, if there's hesitation over which one, I mean, there are limits to how much can go into an ABLE account. So that's a limiting factor, but that certainly wouldn't be a reason to have a concern on opening an account. I don't know, Alicia, is there anything else you can think of that we want to definitely disclose?
No, not that I can think of off the top of my head.
So this question, if the person does have an account, has not withdrawn the funds to pay for a qualified expense, if they do take the money out and put it into a normal bank account, then would for him to purchase it, does Social Security count that as income if it goes into a normal bank account while they're waiting to purchase the item? Does that make sense? What I'm saying, because if they are taking it out to put it into account so a person can buy something else, then does that money count towards SSI?
So once again, we're not going to give legal advice, but what I will tell you is when I went through the slide on housing, I'm trying to remember which direction that is. I think it was back here. I mean, you know, the logistics of doing it with housing and rent, you have to be very careful there that you're taking that out in the month that you're paying the rent. So I think that it's anticipated that you might need to move money over. You know, if I were to give advice, I would make sure that you don't make that a long period of time, because you are going to have to be able to prove that it was used for a qualified disability expense. But to my knowledge, the only real caution and restriction is on that housing and rent. Alicia, I don't know if you have anything to add there.
Yeah, I mean, I'm going to mimic obviously the tax and legal advice, but it's my understanding I think you could use it to put it into your account, but then you would want to spend the money. Let's say I was going to buy, I'm trying to think of something off the top of my head. Let's say I was going to buy a bicycle. I would want to take that withdrawal and then go purchase the bicycle once I have the funds. I wouldn't want to hold it.
And can a person outside of Iowa contribute to these funds?
Yes. Yeah, they wouldn't get that tax deduction. That's an Iowa tax deduction. So if you're not an Iowa taxpayer, you would not get that deduction. But there's no, go ahead.
I was going to say, I think on top of that, you don't have to be an Iowan to be the account owner either. So you can contribute to maybe an Iowan's account who has one, or I could live in Nebraska and have an IAble account. We always recommend checking with your home state, but it is an option.
Can you just explain what we mean by sunset when we talk about something sunsetting?
I apologize for using, that's probably a well-known legislative term. So when they passed the bill that allowed for those transfers, so I use that in the context of transferring a 529 plan into an ABLE plan. When they passed that legislation, they basically said this particular piece of legislation is going to end in, and I believe it was December of 2025. So they created within the legislation, the sunset is the term used to say that they put an end date on that benefit.
Okay. Somebody would like to talk a little bit about the fees that are charged. If you only had $25 in the account, it would seem that the money would disappear within 6 months with the fees. Is there a reason for all of those fees?
Well, unfortunately, we have worked really hard to try to, again, that's one of the reasons why we were we were original state in the National ABLE Alliance. We are working very hard to get the fees down. We have a program manager. They don't do this for free. The state certainly, can do a lot of this with, certainly the public purpose. But, when we have a partner who's actually maintaining those accounts for us, there are fees for that. They will never take an account into the negative. So, it's not like if you have an account and there's not enough money to take the fee out, it won't go negative. But unfortunately, fees are a part of that. I would agree when I tout that you can open an account for $25, I would encourage contributions to that account, because obviously the more money that's in there, those fees are going to be charged. I'm not sure, Alicia, is there anything else you want to add to that?
No, I think that, covers it well. I don't know if you mentioned, but while the fees are there to help run the program, for the investment options, the asset-based fees are pretty low from what you could get if you were going to go just purchase the investment options on your own.
Right. I read that the Iowa 529 plan limits affect how much can be in an IAble account before no longer qualifying for Medicaid, which would lower that $100,000 limit for those dependent on Medicaid. I'm not sure if I follow that question.
I'm not sure I followed it either.
No, but there isn't a limit. The funds in an IAble account, there's no limit for Medicaid. So the 100,000 is for that SSI. It's not for Medicaid. And so maybe it's leading to the 529. You can only transfer up to the annual contribution limit into the ABLE account annually. Would be my best guess.
And
Before,
then
I was just going to
go ahead.
Knowing that again, that there is that sunset. People can transfer 17,000. Again, the total contributions can't exceed 17,000, but you could transfer 17,000 3 times between now and 2025. So.
And then somebody has a question about the representative payee that we just talked about. So their organization was under the impression that due to being the rep payee, that they could not put SSDI or SSI in an IAble. If they did not have a rep payee, then they could put those funds into an account. And they're wondering if that changed or if that's just the way it's always been.
I don't think that's changed to my knowledge. It might be. I do know some organizations might have policies that they can't manage an IAble account previously, but there have been a lot of changes. So I do encourage, if we call them entities, if an entity has that, for them to reach out, because there might be, some of them might change that the entity would be more willing to have the accounts opened.
Okay. We've recently been appointed guardian and conservator for a person with a disability. The previous guardian resigned and the current IAble account is unmanaged. We need to gain control of the account. The person cannot manage their account on their own. How do we gain control, password, all of that information?
So definitely reach out to the plan, because there will be that ability to certify. At some point, without knowing the specifics of the plan, I'm not going to be able to provide all of the information. They may have to provide documentation if there's different conflicting documentation we have on hand, but if there isn't, then they would be able to certify who they are in the hierarchy. So I would definitely recommend, I would call. It'll probably be a little easier to talk through it.
And as I was fumbling around there, I was trying to get to this slide. So our toll-free number, it's actually on every slide page, but that 888-609-8910, that's answered during business hours.
Okay, you're right. We did have a lot of questions about what happens when somebody passes away, but I think we covered that to the ability that we can. You mentioned an account can have a combination of the checking option and investment options. When I opened my account 3 years ago, you had to choose either or. If a member opened the account in the past with only one option, how do you add the other?
Well, you should be able to do that online. So I'm a little surprised by that though, because we have always had that ability to have more than one option. So it may have been just the way that the enrollment was presented. I think we've gotten a little bit better at how the enrollment forms or the online process works. But Alicia, I believe they can just log into their account, or there would be a form that they can do to add an option.
Yep, you could do it either way. You could log into your account and do it. If you want to switch between the funds that are already there, you can. You can only do that twice per year. So when you switch investment options, you can only do that twice per year, but all new contributions you could choose, they go into whichever investment option without counting towards your twice per year as well.
If you are a rep payee, but there is a guardian, can we, as the rep payee, open the account if the guardian agrees?
If the guardian is not able or willing to open the account. So I think if the guardian says, I don't want to do it, I'm not willing to do it, then in that case, the rep payee would have that ability. Just know that if the guardian were to, well, I'm not, guardian's not a real good word, but right, Alicia, but that a conservator or somebody who has legal capacity over them would have, would have dispute abilities. But yes, if somebody higher up in that hierarchy says, I really don't want, I'm not going to do this, that would put the rep payee in the position that they could.
Okay. Just a second here. I lost my place with all the questions. Okay, here we are. How do you close the account if the account owner changes his or her mind after it's open?
So to close an account, that's just, again, that's something you could do either online or with a form to be able to close the account. Just remember that there could be tax consequences to that, because that's not going to be considered a qualified disability expense. So there would be, on any income that was earned, there would be federal taxes that would be due. Alicia, remind me, do you know off the top of your head if that 10% penalty applies to ABLE?
It does.
Okay, so there would be a 10% penalty to the federal government in addition on any portion of the interest earned. So not your principal is always yours. But if your plan had growth in the investments, then there would be a 10% penalty, plus you would pay taxes. If you took a tax deduction for it, then that would be reportable as income to the account owner. So the account owner then would have to report on their Iowa income taxes, not federal, but their Iowa income taxes to the extent of what was contributed. But outside of that whole big legal disclaimer, the money is always yours. You can always close the account at any time. There's no prohibition to that.
And I would say if you closed the account and took all the funds for a qualified disability, related expense,
Yes.
then that would not, sorry, Karen. Karen's, it would only be if it was a non-qualified disability expense for how you withdrew the funds.
Thank you for qualifying that. Yes.
Right. When you open an IAble checking account, do you automatically get that debit card? And is there a cost for it?
There's not a cost for the debit card. And yes, you do get it. There is a cost if you would prefer to have checks, paper checks, and you can select that during the enrollment process, but the debit card comes with no cost.
Okay, is IAble account considered as owner's property on the annual court report?
As what type of property?
Owner's property.
I assume the owner would be the person. Honestly, I can't give legal advice there. I'm not 100% sure. I'm not familiar with that form. I mean, the owner would be the account owner. So the person with the disability, it is their money. The money in the account is theirs, but I'm not familiar with that form. So I'd hate to try to give some legal advice there. Alicia, are you familiar with that?
I'm not for sure if it's in regards to SSI, SSDI, or Medicaid, but the assets are disregarded up to that 100,000 for SSI, but otherwise I'm not familiar. Sorry.
And just the only way to get a debit card is to have that checking account, correct? That's the only plan that allows you to have that. So if you don't have any money in that one plan, then you would not get a debit card.
Correct. If you're just in the investment options, then you would not, there would not be a debit card. You can't use a debit card to take money out of one of the investment options. You can move money between your, the checking option and the investment options. Alicia, does that constitute?
If you don't have systematic exchanges set up, it would. So I'm sorry, I was answering questions during a lot of your presentations. So I don't know if you talked about systematic exchanges.
I did not. So
okay. So systematic exchanges gets really in the weeds. So please reach out to us if you have questions. But what IAble has done is they've set up systematic exchanges. So you can set up so automatically, let's say you pick quarterly, transfer X amount of money from one investment option, let's say to the checking option. So then you can use the debit card and that won't count against one of your two investment changes. And like I said, please reach out to the plan if you have questions. We can explain it a lot easier when we're talking about those one-on-one situations too.
Can somebody moving from another state transfer one ABLE account to another ABLE account? If they're in a state that had an ABLE account, are those funds transferred to one to another?
Yes. One of the federal regulations is you cannot have two ABLE accounts for the same individual. So the person with the disability can only have one, but you can always move it from one ABLE plan to another.
The total amount. So even if it was the 100,000 that you had in it. Okay.
Yeah, you cannot own an account in Iowa and an account in Illinois. You would have to, if you had an account in Illinois and you wanted it to be in Iowa, you'd have to move the entire amount of that account to Iowa.
And just to clarify, paying your mortgage for your home is a qualified expense.
Correct. For the person with the disability, yes.
Okay.
Number of the expense has to be for housing expenses has to be in the same month because that's that one oddity for those.
Okay. As family members, we pay for expenses for our family member with an IAble account. When request reimbursement, what documentation do we need?
Well, here's the great thing from our view is you don't have to give us any documentation. But then I'm going to caution you to say you definitely need to keep that documentation because you could, if you got audited in the future, you may need to be able to demonstrate that it was for a qualified disability expense. Again, we have kind of an Excel spreadsheet up on our website that you can use to kind of track those distributions, but you will want to keep those for your records. We're not going to ask for those. We're just going to have you check a button that says this is a qualified distribution.
Okay, in our family, all three of us are on some combination of SSI or SSDI. My understanding is we can currently open an account for our minor daughter, but ourselves not until 2026 because my husband and I were 40 when declared disabled.
Correct. So if the disability onset wasn't until it was after the age of 26, currently you would not be able to open an account. Once the ABLE Age Adjustment Act goes into effect in January of 2026, you would be able to.
Okay. I am currently going to Northwestern for college. Does IAble pay for my housing when I go there?
Well, again, I'm going to start with, I can't give tax or legal advice, but education is definitely one of the things that is an eligible expense. Obviously, living, if you living on campus would be part of that education expense.
Okay. Another question on closing it. So if you do decide you do not want an IAble account and you close it, all the funds have to be used on a disability related expense. Is that correct?
Well, that was kind of, we did it backwards. When Alicia reminded me, I was assuming it was a non-qualified reason that we were closing it. So it depends on,
Okay.
no, the money is your money or the account owner's money. So if you use it for a qualified disability expense and close it, then there's not going to be any tax liability. If you decide to close it and, just do something else with it, not a qualified disability expense, then that's what's going to trigger some of those tax penalties I talked about earlier.
If IAble dollars are all invested, how do you withdraw those monies then?
You always have access to your money. So our program manager is investing money every day, but you have access to your funds. So that's one of the beauties of, being a part of a plan like this, is you can get access to great investment options. But you're gonna go online and you're gonna say, either cut me a check or send this amount of money to my, checking account at a different bank that will then give you the expense. I think, Alicia, you can pay a third party. Is that correct? Do you know off your head?
I don't know off the top of my head. Sorry.
It may be that I'm not 100% sure on that. And since I'm using my computer, I can't Google it.
I'm looking.
Okay. So we can get back with you on who you can make that payment out to. So you can have a direct deposit made to yourself, an ACH made to your checking account, or you can have a distribution check sent to yourself, or there might be a possibility that you can also have that directly sent to a third party, but we'll get back to you on that.
Okay, because we have a couple more. So does that maximum of 17,000, although it's a little bit more than that during that one scenario, but is that maximum per calendar year?
Correct. It's per calendar year. So for 2023, you can put in 17,000. Once 2024 starts, you've got another 17,000 you can put in. So theoretically, if you did it in December and January, you're doing it back to back. It's just 17,000 per calendar year.
And how do you add additional authorized persons to the account?
I believe that's through a paper form, correct, Alicia?
Yep, you can add through the account information change form. You can, let me double check. Yep, account information change form. You can add additional authorized individuals. One thing to note is they do have to be at the same level of that hierarchy if you're adding them. The only instance where that wouldn't be is if the account owner is managing their own funds, then they could add someone as a POA, or sorry, power of attorney. It's hard not to just use the abbreviations.
And we will be sharing this, the PowerPoint to everybody who did attend, that will have all the questions, or the recording, I should say. And then we had a couple questions that we'll get back to people on. And this presentation will be on both the Iowa DD Council website and the IAble website. I think we've got
I found the
all
answer.
the question. Oh, okay.
So qualified withdrawals, sorry it took so long. Qualified withdrawals can be made to a third party as well. You will, when you're filling out the withdrawal form online or by paper, it asks you for that information. It's one of the options.
Well, we do want to just really take time to think from the Treasurer's Office perspective. We really appreciate what the Iowa DD Council does to help promote this program, and want to take a moment to thank, as Treasurer Smith started at the beginning of the presentation, want to end with the role that they play in really trying to help grow this program. Then we would encourage those of you that have, whether you're, watch the webinar live or you're watching it later, just share this information with anyone that you believe could benefit from this program, because this is really a grassroots effort to grow this program. And you guys are really a strong part of making sure we get the word out to everybody that this opportunity is available. So thank you to everybody who attended.
Yes, and I do, before we get off, I do have somebody that in the question said that maybe for the next time that we get together, we have somebody that a couple of people that use the IAble accounts talk about what they use their accounts for and how they track their expenditures. And that might be something that we could consider, is to have some real live users share their experiences with it.
That's a great idea. We appreciate any ideas like that. Please send them our way, because we want to get as much information out there as we can. So that's a great idea. Thank you.
Well, thank you guys for doing this again with us. Such great information.
Excellent. All right. Well, thank you, everybody.
Have a good night.
Thank you.
Take care.
Thank you, interpreters, Sally and Karen. Thanks for being with us.